Hello, this is Business Live from BBC News with Ben Bland and Ty Genwright.
A crucial day for Italian politics, with the country's Prime Minister set to address Parliament as the government braces for a possible vote of no confidence.
We're live, we're in London. That's our top story on Tuesday, the 20th of August. Europe's fourth biggest economy is causing headaches for investors right around the world who want to know how it will tackle its huge $2.3 trillion worth of debt. Also coming up in the programme, a clampdown in Hong Kong as Twitter and Facebook block hundreds of Chinese accounts who they accuse of spreading misinformation. This is how the markets look across Europe at the start of the trading day, all of them picking up on a rally in Asia and on Wall Street overnight, except the IBEX in Madrid down just a shade.
And we'll be getting the inside track on a plastic alternative that's creating a real sting in the kitchen. We'll be hearing from the firm that's made a fabric out of beeswax to cover up your leftovers in the fridge. And do you click and collect, or perhaps you've clicked and forgotten or not bothered? A British survey suggests 1 in 7 purchases are left behind, with customers saying it's too much hassle. So we want to hear your click and collect stories. Get in touch. Just use the hashtag #BBCBizLive.
Hello and welcome to Business Live. Yeah, get those tweets coming in. The thing with click and collect is if you forget, it's then like an extra Christmas, isn't it? The parcel arrives and it's all very exciting. Anyway, we'll come to that later. We start, though, in Italy, where the country's coalition government faces, well, a pretty challenging day ahead. The Prime Minister, Giuseppe Conte, will make a speech at the Italian Parliament later and could face a vote of no confidence. All of this comes at a time when Europe's fourth biggest economy continues to struggle. Italy currently has a massive amount of public debt worth $2.3 trillion. Now, that is equivalent to 133% of its overall GDP, so everything that the economy makes. Now, Italian banks are most exposed to any default on that, but French, German and British banks also at risk. The Italian economy is still recovering from a recession last year. It grew marginally at the beginning of this year, but since then, growth has been fairly stagnant. Despite this, the Italian government is forecasting growth of 0.2% for the year. Now, that is above estimates from both the European Commission and the International Monetary Fund. A major problem is the country's stubbornly high unemployment rate of around 10%, but it is Italy's massive youth unemployment which is causing nightmares. The rate for that currently stands at more than 28%.
Ben, thank you very much. With us now is Crystal Aranda-Hassel, who's Chief European Economist at Mizuho International. Thanks for being with us, Crystal. How precarious a position do you think Italy's in right now, and particularly when it comes to the EU as well?
Well, I mean, you just heard that Italian growth is pretty much stagnant at the moment. It is very, very tricky, but the fact is that politicians have not yet endorsed structural reforms, and this is the very big Italian problem. Nobody embracing the structural reforms that need to be done to get this country up and going.
That's been the issue with Italy for generations now. And now you have populists in power, a two-populist party government right now. Give us some insight into the condition, or what's going through the minds of voters, though, as we look into a potential general election in Italy, particularly those young voters who feel so disenfranchised now by the economy.
Quite frankly, I do think there is a sense of fatigue. Absolutely everybody has been forever promising that they will repair Italy. Now it is the populists, and yet again, nothing much has happened. The populists have been in government, the alliance has been in government, and so far you haven't really seen all that much. And you will continue having this north-south divide if that eventually is not addressed with a totally different set of reforms, in my view.
At a time, though, I suppose, you compare this with the Greek crisis, and everybody thought Greece leaving the European Union was unthinkable. Then Brexit happened. And are there different conditions, I wonder, in Italy this time? Is the idea that perhaps Italy unleashes itself from the European Union, you think, gaining any traction there at all?
I think that Italy will be much more similar to Greece. Populists will do a lot of talking, but ultimately they retrace and do, to a certain extent, comply. But the one thing that plays into Italy's hands at the moment is the fact that the global growth is weak here, there, and everywhere. And Europe does give you leeway if there is recession in terms of using the fiscal pump priming yet again.
Do you think we could be talking about an Italian rescue at some point in the future?
I do think that you can not fully exclude it, but at the same time, don't forget that most of the Italian debt is in the hands of the Italians. And therefore, it is them who shoot themselves into the foot if they would do an Italy exit.
OK, Crystal Aranda-Hassel of Mitsubishi International, thank you very much for joining us with your thoughts today.
Thank you.
Right, let's take a look at some of the other main business stories making headlines. The world's biggest miner, BHP, has more than doubled its net profit on the back of higher iron ore prices. The miner posted a profit of $8.3 billion for the year to the end of June. BHP says higher prices and record production helped to boost revenues.
Major tech firms, including Facebook, Google and Amazon, have testified in Washington against France's new digital tax. In July, the French Senate approved a 3% levy on revenues from digital services earned within France. The tech giants argue it undermines the global tax regime and multilateral efforts to reform it.
The Chinese search giant Baidu has seen its shares surge after its latest results beat expectations. Revenue from Baidu's streaming video service rose 15% and it crossed the 100 million subscriber mark. Shares rose by 8% in extended trading.
And Brazil's securities regulator has opened another investigation into the miner Vale over the January dam collapse, which killed nearly 250 people. The regulator is looking at whether executives breached their duties over the dam collapse. It has the power to impose fines and bar executives from working at listed companies.
Twitter and Facebook have taken steps to block what they describe as a state-backed Chinese misinformation campaign.
Twitter said it's removed almost 1,000 accounts that it claimed were being used to sow political discord in Hong Kong. Well, Monica Miller has the latest for us from Singapore. Monica, what more can you tell us?
Yeah, well, a spokesman for the social media company said that they also said they found as many as 200,000 other accounts that were proactively suspended before going live, and they were designed to spread misinformation. Now, Facebook says that they got a tip, and what they did in response is they removed a smaller number, 7 pages, 3 groups, and 5 Facebook accounts. Now, Twitter's head of cybersecurity says that even though the people behind the activity tried to hide their identities, an investigation revealed that they were associated with the Chinese government. Now, seeing this activity on these sites is reminiscent of the Russian interference in the 2016 U.S. presidential election. Now, Twitter has been open over the past few hours, and they shared a list of these accounts and the tweets that they removed. And this comes after the company was intensely criticized over the weekend for allowing China's Xinhua news agency to buy sponsored posts on the network. Now, yesterday, Twitter said that it would no longer allow such ads. However, it added its new policy did not only apply to taxpayer-funded entities, and that includes independent public broadcasters.
Monica, thanks very much. Monica Miller there for us in Singapore. Let's have a look at the markets, and Asian shares mostly rose in Tuesday trading, sentiment being boosted by hopes that central banks and governments around the world will provide more stimulus for major economies. That has tempered some of the anxiety we've seen recently about a global recession, and it's boosted riskier assets. It's drawn money away from the safe havens such as bonds and gold. The improved mood was picked up in Europe on the main indices. It was helped by a rally on Wall Street overnight as well. The immediate focus now shifts to the minutes of the US Federal Reserve's last meeting. We're due to get those minutes on Wednesday. Traders also keenly waiting on the get-together of America's central bankers in Jackson Hole, Wyoming, and a G7 summit, of course, coming up this weekend. They're looking for clues about what additional steps policymakers will take to bolster growth. Let's hear from Michelle Fleury about the day ahead on Wall Street.
Right now, American consumers are holding up the US economy, but the question is, how long will that last? This week's earnings reports from major retailers should provide evidence on how consumer spending is faring, starting with Home Depot's numbers, which are out this Tuesday. The world's largest home improvement retailer is expected to show an increase in revenue from a year ago when it posts its second quarter results. Investors will also be watching to see if Kohl's, the mid-market department store chain, is able to overcome the challenge of getting people through its doors when it releases its second quarter results. On the economics front, the Philadelphia Federal Reserve Bank puts out its non-manufacturing survey for August. Last month, it showed an increase in activity.
Well, joining us now is Trevor Greetham, who is head of multi-asset at Royal London Asset Management, to talk through the latest market movements and what, Trevor, markets are thinking about the likelihood of a recession at this stage.
Well, the markets have been very volatile recently. Share prices have dropped quite a lot in the last month or so. And the movements in the bond market are the sorts of things that you normally see maybe 8 to 24 months ahead of a recession. So there's some concern about global growth, particularly on the trade side. But we're also starting to see stimulus come through, so interest rate cuts in America, and even talk overnight leaked from the White House about tax cuts, which seems a bit strange when you're 10 years into an economic expansion and you've got a big budget deficit. But there's some definite focus at the moment on getting things moving again.
Of course, one of the things investors are going to be scouring for clues is when we get that speech from Jerome Powell at the big get-together of all the America's central bankers at Jackson Hole. They'll be looking for clues, won't they, about what form any future stimulus might take?
Well, I think the most important thing is that there seems to be a change in attitude about interest rates in America in particular, where they're talking about being a bit more liberal with their inflation target. So if they've been below their inflation target for a while, it's okay to be above it for a while. And that suggests that rates will keep coming down. The markets are actually pricing in a rate cut of 0.5% next month, which is a big rate cut. So I think the markets will be watching that very closely to see if they're getting confirmation of that signal.
And obviously lots of economic threats on the horizon, the consequences of a no-deal Brexit, the US-China trade war, and we've been talking today about Italy. I mean, what do you read as that into that as a threat of spillover across the rest of the European Union?
Well, depending on how things go today, there may be another election. It could be in October, it could be later. It's a bit difficult to sort of judge entirely. It's instability, but because the five-star movement is not necessarily very market-friendly, should we say, a new government that doesn't include them may not be seen as a bad thing by the market. OK, Trevor Greetham of Royal London Asset Management. Thank you for the moment. We'll be seeing you a little bit later with a review of the papers.
Yeah, you've got about 10 minutes to go and order your click and collect, and we'll hear about your experiences in a little while. We want to hear about your experiences of click and collect as well. Hashtag your comments at BBC Biz Live. Still to come, the new fabric that's causing a real sting in the kitchen.
We will be speaking to the firm that's made an alternative to cling film using stingy beeswax.
You're with Business Live from the BBC.